we have a weak economy. The only thing that's strong is inflation. And that's the other thing that surprises me again, or maybe it doesn't surprise me, but that people don't understand that the Fed has lost the inflation war, that it didn't win, it surrendered. And that far from, or rather than moving back down to 2%, that inflation is headed back up to 9%. In fact, it's gonna get higher next time. Well, the problem is that the Fed has used inflation as the economic tool every time something broke. Every time we had a problem in the economy, the Fed's solution was to create inflation. Well, the problem is that the Fed has used inflation as the economic tool every time something broke. Every time we had a problem in the economy, the Fed's solution was to create inflation. The dollar has benefited from a lot of the false optimism surrounding the US economy and how it's going to fare relative to the rest of the world based on Trump. And I think if the world didn't have so much false optimism, I think the gold price would be, quite a bit higher than it is now. Probably, maybe $200-300 an ounce higher than it is. I think we're going to get there. I think it's just going to take a little while for the illusion to fade and for people to wake up to the reality of the problem.
Hello and welcome back to Soar Financially. My name is Kai Hoffman. I'm the EdJR mining guy over on X, and of course your host of this channel and this interview. Really looking forward to hosting Peter Schiff again. He's the host of the Peter Schiff Show and of course chief strategist over at Europe Pacific. Really looking forward to catching up with him. We had him on the program about 3 months ago, but it's time to review 2024 and get our crystal balls out and see what is happening in 2025. Make some predictions, make some forecasts, and let's see how things will play out next year. Lots happening and a lot will happen next year as well. January 20th, just as one date to mention, the new president moves into the White House at Pennsylvania Avenue, so that should be quite exciting from a market standpoint. Lots to happen there. Before I switch over to my guest, you guys know the spiel that watch us regularly. Hit that like and subscribe button. Helps us out tremendously. And if you haven't done so, it's a free way to support this channel. It means a lot to us. Thank you. Now, Peter, it is great to have you on the program again. Good to see you. How are things?
Okay, Kai, how you been?
Keeping busy. It's the week before Christmas and busier than ever, I have to admit, which is a good thing. Peter, let's dive right in. Lots to discuss since we last spoke about 3 months ago. Lots has happened. But reflecting on 2024, if you were to pick one topic, what's one thing that stood out to you in 2024?
Well, I guess, again, I don't know if it's stood out because we've had this problem, but it's just the failure of the mainstream to understand what's actually happening. We have this false narrative all year about how strong the U.S. economy was, how strong the labor market was. And despite the fact that Trump was elected by people who expressed their concerns about how weak the economy was, the number one issue in the election was the economy because it was weak and inflation because it was strong. And people still don't get the predicament that we're in. We have a weak economy. The only thing that's strong is inflation. And that's the other thing that surprises me again, or maybe it doesn't surprise me, but that people don't understand that the Fed has lost the inflation war, that it didn't win, it surrendered. And that far from, or rather than moving back down to 2%, that inflation is headed back up to 9%. In fact, it's gonna get higher next time. So we've got the worst of both worlds coming. Much higher inflation, a much weaker economy, and electing Donald Trump, unfortunately, is not going to change that.
If you were to use one word for 2024, what would it be?
I don't know, maybe ridiculous, especially if you throw in what happened with Bitcoin. So
we'll touch on that. That's an interesting topic. We'll talk about Bitcoin going into 2025 as well. But you touch on the Fed. The Fed has lost the war. Maybe we'll start there. In 2024, we've seen a Fed rate cut, a lot of higher for longer talk, a lot of data dependency apparently. Do you think the Fed handled things appropriately? Did they even have a choice? Could they have done it differently or better?
The Fed hasn't handled anything appropriately. Maybe if you go back to Paul Volcker, but prior to that or subsequent to Volcker, I don't think they've handled anything appropriately. I think that's why we're in the dire circumstances that we are in, is because of how inappropriate Fed policy has been, including the current policy. I mean, the Fed made a mistake in lowering rates to zero. It never should have lowered them to zero even before COVID, but it made a bigger mistake bringing them there after COVID. The Fed never should have done any quantitative easing, going back to the first time I did it in 2009. It's been one mistake after another. The Fed shouldn't have lowered rates to 1%, and helped inflate the housing bubble. So, the mistakes have been going on ever since Greenspan was the Fed chairman, unfortunately. And, it hasn't gotten any better. Rates are still too low. The Fed never should have stopped hiking. They never got into restrictive territory. Despite the fact that they claim rates are restrictive, they're not restrictive in a sense that they're stopping the borrowing. The borrowing and spending has continued unabated by the public sector and the private sector. The savings rates have collapsed. The purpose of higher rates is to discourage borrowing and to encourage savings. But none of that has been achieved because the Fed stopped too soon. And so we continue to go deeper and deeper into debt, despite the fact that the Fed has hiked rates. And now the Fed is cutting rates. So they're pouring gasoline on the fire that they lit.
Oh, absolutely. Question is, though, we're recording this 26 hours ahead of the Fed meeting, or maybe Jerome Powell stepping in front of the press here tomorrow, probably announcing another Fed rate cut. And I've discussed this with somebody else on the program yesterday, and I don't understand why they would be cutting right now. Maybe I'm too simple-minded here, but Peter, explain to us, why are they cutting tomorrow? Like, why is the market expecting them to cut if everything else points, like you mentioned, that to higher rates? Like unemployment is rising again, and other things like inflation is ticking up?
Yeah, well, first of all, unemployment rising, the way the Fed looks at it would be a reason to cut, although they haven't even acknowledged any weakness in the labor market, despite the fact that there is tremendous evidence that the labor market strength was exaggerated over the past couple of years, and we've never actually had a strong labor market. It's been weak, and it's getting weaker. But all the other economic data really has been weak, and it's been ignored. But I think the main reason the Fed is cutting rates is because the market expects them to do it. And so the Fed doesn't like to disappoint the market. So if markets expect 25, the Fed's going to deliver 25. Now, the question is, what is the Powell going to do at the press conference tomorrow to try to influence perceptions for the next meeting? And I have a feeling that Powell may suggest that the next rate cut is not a guarantee, that the Fed is kind of taking a wait and see attitude. They want to continue to evaluate the incoming data before deciding on the next move. So I don't know that they're necessarily going to say that, we're going to cut again at the next meeting, but they're certainly going to leave the door open to that possibility. And then we'll see what type of expectations the market develops between now and then based on the incoming data. But the odds are, if the markets build in the expectation of a cut, the Fed will deliver to meet those expectations.
What I mentioned, by the way, the jobs market is like the numbers stabilized. We got a non-farm payrolls report about 2 weeks ago that seemed stable. Let's call it stable. That's why I mentioned it. Like, it's not improving. But those reports are meaningless because they just downwardly revise them. So you can't put any stock in the initial number, because the actual number could be very different. They could report that payrolls went up by 200,000, and months later they may say, "Oh, they went down by 200,000. We got it wrong." So there's no reliability in these numbers. I don't even think they're a close approximation of what the actual number is going to be. I don't even think they bear any resemblance. It's just a random guess that actually has no basis in reality. No, absolutely. It's like I just have to use the numbers that are being fed to me, sadly. And of course, I can't go from house to house and double check them personally. But until the next Fed meeting, we have another big event looming in the U.S., and it's the new president, or the president-elect, moving into the White House on January 20th. Do you think the new president will have any input on Fed funds rate, or will he try to insert at least some type of pressure on Jerome Powell here?
Well, I think as the economy weakens and unemployment rises, I think, yes, he will be beating the drums for lower rates and a return to quantitative easing, the same thing that he did when he was president the first time. But, the immediate effect, I don't know how much effect he'd have on it right out of the gate. But I know there is a lot of false optimism surrounding Trump and how great he's going to be for the economy. We had similar optimism the first time he was elected. Well, I would say that it's even more extreme now than it was then. Yeah, I think there will be some deregulation, but to the extent that they will deregulate beyond what they did the first time remains to be seen. But Trump was a big spender the first time he was in office. That the budget deficits grew every year that he was president, as did the trade deficits, because government spending went up every year he was president. Even before COVID, you're talking about welfare spending too, not and military spending. So, I don't really see indications, despite a lot of talk out of Ramaswamy and Elon Musk about all the cutting they're going to do. They ultimately have no authority to cut anything. They're a think tank that can make suggestions to Congress. We've had plenty of suggestions to Congress to cut spending, and it's always ignored.
In Germany, we have a so-called tax black book, where once a year, there's a group that sort of puts it together and just showcases how stupid, or like in what stupid ways we're wasting our money. I think that'd be a start. I think that's what they're trying to do at DOGE, the Department of Government Efficiency. Maybe just highlight some of the stupidity or some of the nonsense people are spending, or tax money is being spent on.
Rand Paul's been doing that every year. On the floor of the Senate. Nobody cares. It's nothing happens.
It's interesting because the new president is already making so many headlines and ruffling feathers, with prime ministers flying down to Mar-a-Lago to renegotiate potential tariffs, like we've seen Prime Minister Trudeau from Canada fly down like within 24 hours of a 25% tariff announcement. How much of it is just hot air, and how much can he follow through on? Like if you were to speculate for 2025?
Well, the problem is Trump is got a pistol pointed at himself, and he's threatening to pull the trigger, and the rest of the world is panicking that maybe he'll do it. There's so much widespread ignorance when it comes to tariffs. Yes, if the president imposes high tariffs on American citizens who buy goods from Canada, who buy goods from China, then American citizens will buy fewer goods from those countries because they won't be able to afford it. Now, in most cases, they'll just have to do without those goods entirely, because there are no substitutes that we produce domestically. And so, yes, that would be very harmful to Americans who can't buy things. Now, for the rest of the world, yes, they would not be able to sell as many goods to America. They would still sell a lot to America at higher prices that, for Americans, they would still get, their prices. Americans would just pay more. So their exports to America wouldn't go down to zero, even with the tariffs. But maybe they would go down 20 or 30%. I don't know. But they would still produce those products. And so if they don't sell them to America, they will sell them to the next highest bidder. There are plenty of other countries that would take the goods that Americans can't afford. It's not like we're the only, game in town. And, if there are no higher bidders in foreign markets, their own consumers can have a crack at buying that stuff. And so the most amount of damage would happen in the United States. The only way that Canada or China would increase the damage is by retaliating in some way, by either imposing tariffs on their citizens for buying stuff from us. That would harm themselves more than it would harm us. Or if they try to do something like lower the value of their currency to make their goods cheaper for Americans, because when they do that, they make all goods more expensive for their own citizens. So the best thing that the rest of the world can do with respect to Trump's threats is let him do it, and just go about your life. And in fact, I think if Trump does do this, the risk is that the world realizes they'd be better off without exports to the United States, because the problem is we don't pay for anything that we import because we don't have the exports. All we do is print money and export inflation. So I actually think the rest of the world would be better off if they weren't trading so much with the United States, because we can't really afford their stuff. And so Trump may, in fact, do them a favor if these tariffs are a wake-up call that they need to, get off of this relationship, which benefits the United States to the detriment of everybody else.
Lots of implications there. Tariffs are inflationary. We talked about inflation previously.
They're not inflationary per se, because it's a one-off increase in prices. And that's not inflation. Inflation is going to be prices going up every year. So unless Trump increases the tariffs on an annual basis, they're only going to result in a one-term spike in prices, and then from there they'll just go up at whatever rate the inflation might have driven them. So it's not necessarily inflationary. What's inflationary is if the tariffs help cause a recession, and then the Fed prints more money to stimulate the economy. That's inflationary.
Interesting. Appreciate you clarifying that, because it sort of brings me back to interest rates again, and we can't escape that discussion, right? It's like the dog chasing its own tail. Like, what do we do in that situation if that happens, Peter? Like, it can't be lower. It can't be lower interest rates. You can't have both. You can't have zero inflate or optimal inflation, whatever that number is, and low interest rates in that case. Would you agree with that statement?
Yeah, well, the problem is that the Fed has used inflation as the economic tool every time something broke. Every time we had a problem in the economy, the Fed's solution was to create inflation. But they've created so much inflation, and it's not just the Fed, it's central banks all around the world, that the number one problem that everybody is facing is now inflation. And so since inflation is the problem, inflation can't be the solution to the problem. So the Fed is finally in a box, and there's no way out. And the same would be true for the ECB or the Bank of Japan or the UK central bank. They're all in this predicament.
No, they're all tied together to a degree, with the U.S., of course, being the leader. You touched on Japan, and it brings me to an interesting appointee or potential appointee, is the U.S. Treasury Secretary, Scott Bessent. I'm curious if you have some thoughts on that person and personality, maybe who will be appointed here in January as well, based on like his economic agenda. A lot of people say he's close to Shinzo Abe, or close to theories that Shinzo Abe sort of in Japan installed, meaning zero to negative interest rates, governments buying their own debt, meaning the Fed would have to step in. Is that something you see happening in the U.S. at some point as well? And what should we make of that appointment, Peter?
Yeah, look, he's obviously a smart guy, successful entrepreneur, hedge fund manager. He's made a lot of money. He worked with Jimmy Rogers way back in the day when he was with Soros, and I know Rogers pretty well, and where I'm very different than Soros. Certainly politically, I'm on the same page as Jim Rogers. So, I don't know exactly. I think Bessent is a lot closer to Jimmy Rogers than George Soros when it comes to political or economic philosophy. So it's hard to say exactly what he's going to do as Treasury Secretary. I think a lot of the stuff that he says, of course, I take with a grain of salt because, he wanted the job of Treasury Secretary. And so there were certain things he had to say, to toe the party line, according to Trump. So I don't know if he's saying some things because, he needs to say them because that's what Trump believes, or if he actually believes that. But I have a feeling that, he's not as enthusiastic about these tariffs as Trump might be. And so he may try to push back a bit. He talks about a strong dollar. But, to really make America competitive again in manufacturing from where we are now, it's going to require a weaker dollar, I think. And it's going to require a big recession, which nobody seems to want to embrace up there on Capitol Hill, because Trump promised an immediate economic boom, which can't be delivered. All that we can deliver is more air in the bubble. So if Trump just wants everybody to feel better immediately, the only way to do that is to inflate a bigger bubble than the one he inherited from Biden. And it's not like he just, inherited it because he turned it over to Biden. He inherited the bubble from Obama and allowed it to get bigger while he was president. And so we've been passing this bubble from president to president. What we need is a president who's going to prick it. But nobody wants to, because they don't want to get blamed for the short-term pain that doing that would bring about.
I read an interesting headline this morning. I haven't had a chance to go into detail, but Javier Milei apparently got rid of recession in Argentina, or Argentina stepped out of recessionary environment, and they're on economic growth path again. Is that a winning formula, what Javier Milei did? And maybe we can describe a little bit what he has done, and is that a way to maybe support or get the U.S. out of its death spiral, its doom loop, some people have called it on this channel? Is that a way to do it? Do we need to rip the Band-Aid off, and is maybe Trump the right person or not?
Well, yeah, I mean, that's the only way to do it. But unfortunately, Trump doesn't want to rip off the Band-Aid. He's promised not to rip off any Band-Aids. Yes, the Argentine economy is now emerging from recession, but it originally went into a big recession as a result of the big cuts to government spending that were made and the changes to policy. And so the same thing would happen in the US, but Trump has not prepared the electorate for a major recession. And what's also going to have to happen in that recession is there's going to have to be a lot of bankruptcies and defaults. And so a lot of people are going to lose a lot of money during the recession that's necessary to really get us back on the right track. But again, Trump, doesn't want that. He wants the stock market going up. And if we did the right things, the stock market would go down.
Peter, you mentioned something earlier that I definitely need to follow up on. It's the devaluation of the US dollar. And I can't shake the feeling that that's exactly the plan over the next 2 years before focusing on it again. Can you elaborate on that thesis a little bit? What would Trump have to do to devalue the dollar, and where would it have to go? Let's say using the Dixie as an example and parameter here.
Well, everything we're doing should have already devalued the dollar. All the money printing and the deficit spending, the trade deficits, the budget deficits. If we were a normal country, the dollar would be much lower than it is today. But we're not, because we have the reserve currency and everybody just takes refuge in our currency. Like now people are worried about a trade war. And so they're buying dollars, even though the U.S. would be the biggest loser of any trade war because we're the biggest importer. So we are the country that is most dependent on imports. And if we make imports a lot more expensive, it's going to be the most harmful to us. But again, people don't seem to understand that. And so they're buying the dollar anyway. So the dollar could collapse at any time, completely without the control of Trump. But obviously, if Trump wanted to orchestrate a dollar decline, I mean, they could do that. I mean, they could come out and specifically state that they wanted a lower dollar, and they would probably get one. They could encourage countries to intervene and sell dollars, although that might be counterproductive, because if the world is selling dollars, they're also selling their treasuries, driving up interest rates. But then again, the Fed could print more money and buy those bonds and create more inflation to devalue the dollar. I mean, it's not good for America to have a weaker dollar. But as long as the dollar is as overpriced as it is, I think it's going to be very difficult for us to turn around the trade imbalance.
What it's like when I brought up Scott Bessent and Shinzo Abe 2 degrees, like one of my biggest, I wouldn't say fears, but maybe predictions or so, is that the US will go the way of Japan at some point. It's not going to happen tomorrow, but very low interest rates, maybe even negative interest rates, a devalued currency, maybe not even the world currency anymore. And again, not happening tomorrow. But is that something you envision as well? It feels like, and based on what you just mentioned, maybe that's where it is trending. Like we'll have to monetize the debt, meaning the Fed will have to buy up the bonds that the Treasury is issuing because nobody else will buy it, or at least demand won't be as big as it was in the past. Is that a risk? Is that one of those, let's call them endgame scenarios here, Peter?
Well, it's not a risk. It's already happening. The Fed has been monetizing the debt for years. That's what quantitative easing was all about. That's why the Fed has near $7 trillion balance sheet. That's $7 trillion of debt that's been monetized. Now, they're going to monetize a lot more. I think they're just getting started. I don't think it's going to be exactly like Japan. I actually think it's going to be a lot worse. I think that beneath the surface, the Japanese economy was actually in better shape than ours. Yet their central bank made a lot of mistakes to create a situation that's much worse than it needed to be. And our central banks have made the same mistakes. But, we've been able to get away with it. And the question is for how much longer? But I think that at the end of the day, we're much more vulnerable with the nature of our service sector economy, the destruction of our industrial base over the decades of reliance on the reserve status of the dollar, the enormity of the debt, not just the $7 trillion, $36 trillion national debt, but the couple of $100 trillion of unfunded liabilities, Social Security, Medicare, government pensions, guaranteed mortgages, guaranteed student loans. I mean, there's so much of debt out there that the U.S. government has got the U.S. taxpayer on the hook for. Of course, the taxpayer doesn't have the resources to make good on the debt, so it's just the Fed that prints the money. But it's trillions and trillions and trillions of money printing that's baked into the cake. And so the dollar has to go way down. I mean, this is just the beginning. You look at gold at $2,600. When the Fed was created, you could buy an ounce of gold for $20. So what does that tell you? I mean, the dollar has lost better than 99% of its purchasing power since the Fed came on the scene. Whereas before the Fed came on the scene, in 1789, you needed $20 to buy an ounce of gold. And in 1913, you could still buy the same ounce of gold for $20. So before the Fed, we had a stable dollar. Ever since the Fed, we've had a collapsing dollar. And I think the speed of the collapse is accelerating and will accelerate from here.
Hashtag end the Fed. Like, it sounds almost like a conspiracy theory, but Peter, what are your thoughts on that topic? Like, should we get rid of the Fed, and what does the word look like afterwards? I'm always wondering what it could look like, and how would our monetary system look like post Fed?
Yeah, that's always my next question. When someone says end the Fed, my response is, and replace it with what? If the answer is replace it with nothing, then I'm in favor of ending the Fed. If it's, well, let's just let the government do it. Let's give the printing press to Congress or the White House. That's even worse. So if we were to go back to what we had before the Fed, I'd be all in favor of that. Because before we had a Fed, we had private banks that issued their own currency, and it was all backed by gold, and everything was fine. And the federal government had no role in the monetary system whatsoever, and there was no central bank. So that'd be fine with me. I would also be in favor of restoring the original intent of the Fed, the original Federal Reserve Act, the way it was initially proposed, ratified, and signed into law. If we still had that Fed, I'd be okay, right? Because the way the Fed was conceived, Federal Reserve notes were going to be 40% backed by gold, 100% backed by commercial paper, which was liabilities of other banks. And the Federal Reserve was banned from owning any obligations of the United States government. So not only couldn't they buy any U.S. treasuries from the government, they couldn't go into the marketplace, the secondary market, the way they do now, and buy treasuries. So the Fed couldn't have any U.S. debt, any mortgage-backed securities. None of that could be part of the Fed's balance sheet. And if you look at the original purpose of the Fed, which was to provide an elastic money supply, what that meant is when the economy was growing, the Fed would allow the money supply to grow. But when the economy was contracting, like in a recession, the Fed would shrink the money supply back down. That is the opposite of what it does today. Today, when the economy is doing well, they expand the money supply. And when it goes into recession, they expand it even faster. So there's nothing elastic about that. It doesn't expand and contract. It only expands at various speeds. So we got to go back to the original purpose of the Federal Reserve, or we got to get rid of it entirely. But what we can't do is let the U.S. government assume the role, because that would be an even bigger disaster.
No, I agree. And it's an interesting topic because I follow those discussions online as well. And nobody's really offering a proper solution, I think. I think it's just an idea. So we'll see where it goes, because 2025 could be quite interesting when it comes to that, because with the new U.S. president, maybe he rips off the ban. I don't know. I doubt it personally. But one thing he does need to address is the growing interest rate payments on the U.S. debt. You touched on it. It's spiraling out of control. Congressional Budget Office is forecasting $1.7 trillion of interest payments by 2034. I personally think we're going to reach that in 2026 or even maybe 2027.
2025? What do they mean? I mean, we'll probably get there but I think by the end of next year, we'll be at $2 trillion. I mean, we're already at about 1.1 to 1.2 trillion right now. And it's going up. If you look at the fact that we're adding about $3 trillion a year to the national debt, and if we have to borrow that $3 trillion at 4%, that's just an extra $120 billion in interest that gets added just on that. But over the course of the next year, maybe a third of the national debt matures. And a lot of that debt is financed at well under 1% interest rates. It's got to be rolled over above 4%. So let's say $10 trillion matures and has to be refinanced at an extra 300 basis points. That's another $300 billion in interest there. Um, so it's really growing at a rapid pace.
The numbers are staggering. Like I have a hard time even writing them down, and not forgetting a zero. Quite
And I
honestly,
think the deficit's gonna get bigger. It may be $4 trillion in the next year. If you take a look at the first 2 months of fiscal 2025, it set a record for the first 2 months, and it's on pace to shatter the COVID record from 2020 at about 3.7 trillion, adding to the debt in 1 year, and that's assuming Trump doesn't make it any worse with tax cuts.
we're trying to forecast 2025 a little bit. Do you foresee a liquidity crisis in the next 12 months at all, or do you think the U.S. will find enough guarantors sort of to come up with that money?
Well, I mean, the Fed just provides the liquidity, so it's hard to run out of something that the Fed just provides in infinite supply. So the problem is inflation, and that problem is going to get worse. So it's not going to be a liquidity problem; it's going to be an inflation problem, and we're going to have an inflation problem because we have a solvency problem, which is we're insolvent, and so the only way to pay the bills is to inflate, and so we end up with inflation. I mean, that's where all roads lead. Unfortunately, they may lead to hyperinflation.
Yeah, we don't want that. We don't like. It's not going to be a nice environment. But Peter, shifting gears a little bit, we have to talk gold as well and gold price performance over the last 12 months. Gold is up 27.5%. The S&P is up 27.5% year to date. How happy or how disappointed are you with the gold price performance over the last 12 months here, Peter?
Well, it's been a good year for gold. Gold has pared its gains a bit in dollars since Trump was elected, although it's gone on to make new record highs in other currencies. The Canadian dollar, the Australian dollar, the euro, the pound. We've seen record high gold prices after Trump was elected. And that's because, the dollar has benefited from a lot of the false optimism surrounding the U.S. economy and how it's going to fare relative to the rest of the world based on Trump. And I think if the world didn't have so much false optimism, I think the gold price would be, quite a bit higher than it is now. Probably, maybe $200-300 an ounce higher than it is. I think we're going to get there. I think it's just going to take a little while for the illusion to fade and for people to wake up to the reality of the problem.
So in summary, you're saying eventually the gold price and the S&P 500 are going to decouple and not going to move in lockstep further high or higher anymore?
Well, they could move in the same direction. I just think gold will move a lot faster. So in real terms, the S&P will be going down. Look, the U.S. stock market, no matter how you look at it, is very overvalued. Now, the only way it's not overvalued is if you say, well, the dollar is going to crash. And so, priced in what the dollar is going to be worth in the future, maybe it's not overvalued, which could certainly be the case. But in terms of gold, in terms of how many ounces of gold you need to buy the S&P versus what the earnings are of the S&P in gold. So how many ounces of gold is the S&P earning right now versus the price of the S&P in gold? The PE is much too high, based on where it historically would be. And so I think that real U.S. stock prices are coming way down. What happens to nominal prices is harder to say, and I think even less relevant, because what matters to investors is not what their stocks are worth on paper, but what the value of those stocks will buy you in the real world.
Do you foresee any other catalysts for gold besides the known ones, like geopolitical situation or so, coming up in 2025? If you were to speculate, what would be the number one trigger for a higher gold price?
Well, I think the main trigger is not going to be geopolitical. It's going to be what happens in the U.S. economy. I think if the U.S. economy goes into recession officially and the Fed goes back to QE, I think that's going to be the biggest positive catalyst for gold.
Okay. We've had a guest on here on the channel, Christian Watzian, and he said mining stocks haven't broken out because the underlying asset gold hasn't broken out against the S&P 500. Would you agree with that thesis, or do you have any other reason why the mining stocks haven't performed?
No, I mean, gold has been rising against the S&P for 25 years. Gold has beaten the S&P for 25 years. So that's not true. Now, the cost of mining has gone up a lot as well. So that has reduced somewhat or substantially in a way the gains that gold mining companies have had from a higher gold price because they've also had a higher production cost. But recently, that's kind of turned around. We've seen production costs falling with the price of gold continuing to rise. So I think that ultimately that's going to really play well into margins for these companies. But if you look at the PE of these stocks, like look at Newmont Mining, it's at a PE of 12 and a half, and Barrick Gold, it has a PE of 12.8. These are ridiculously low valuations for these stocks when you have a S&P trading, closer to a 30 PE. Historically, Newmont and Barrick trade at premiums to the S&P, not huge discounts. So the main reason I think that gold stocks are still this cheap has to do with investor confidence or lack of it. I just don't think there's any interest in buying these stocks. And so they're very cheap because nobody wants them. People would rather buy the S&P. They would rather buy tech stocks. They would rather buy Bitcoin. And so there's very little investor demand right now for these gold stocks, despite the fact that their business models are working and they're a lot more profitable than they were a few years ago. But if investors don't care about the profitability and they don't share an optimistic outlook for the future price of gold because they just think gold's going to crash for whatever reason, even though it's been steadily increasing for 25 years, it's been climbing a wall of worry. The expectation has always been that the price of gold is going down, not up, and it keeps confounding expectations by rising anyway. And so that's really why gold stocks are cheap. I mean, because I think investors have got it wrong and they're being mispriced. But that's the opportunity in the sector. You buy the stocks when nobody wants them, and you hold them until everybody does, and then you can sell them at a much higher price. So that's what I've been doing. I've been holding them for a long time, waiting for people to figure this out. It's taking them longer than I thought to come to the correct conclusion. But the longer it takes, the higher the price is going to be when they finally figure it out. And so the more money that I'll make, I think, and the more money that people who are doing the same thing. So, I've got a fund, the Euro Pacific Gold Fund, which, I would encourage people to own. You can buy it no load at Schwab Fidelity. You got to buy the no load class, or you can contact my guys at Euro Pacific Asset Management. We also have separately managed accounts in gold stocks. I think these are going to be the 50, 100 baggers. I think, the junior mining sector is completely unloved and as cheap as it's ever been. If you buy the right stocks, I think you can really hit it out of the park. But you got to be willing to take the risk. There's no guarantees, especially when you're mining for gold.
Oh, absolutely. And there's another threat, and you brought it up. I would say threat or maybe competition to gold is Bitcoin. I know you're a big fan of Bitcoin, Peter. That's why you're the right person to ask. But if you were to weigh what President-elect Trump has been saying about Bitcoin as well, how much of a danger is Bitcoin to gold, and or is it complementary? Sort of what are your thoughts on the next 12 months? What is Trump going to do in the U.S.?
But I don't think it's a danger to gold. In fact, if anything, it may ultimately help gold because of all the money wasted on Bitcoin. It contributes to inflation. It contributes to making an economy less competitive and less productive. If we waste all of our money on Bitcoin and figuring out how to trade Bitcoin and mine Bitcoin and whatever, those are resources that can't be invested productively to produce things that people actually need and they actually want. And so Bitcoin is probably good for gold. It's bad for the people who buy Bitcoin because they could have bought gold instead. Now, I know, yes, the people who bought Bitcoin years ago instead of gold have made a lot more money on paper. The problem is most people who bought Bitcoin are not selling any of their Bitcoin because they think it's going to keep going up indefinitely. And so they haven't actually realized any of those gains. The smart people are selling. They're the ones that bought 10 years ago, at a much lower price. And yeah, they're cashing out. They're laughing all the way to the bank. But the hodl gang is going to be left holding the bag. I think the main reason that Donald Trump embraced crypto was to get the votes of the crypto community, especially young people who typically vote Democrat. Now they had a reason to vote Republican because the Republican candidate was promising to make them rich. And so he got a lot of votes, but he also got a lot of campaign donations that he needed from the crypto industry. And so what he's doing now is paying back those donors by promoting Bitcoin and talking positively about a Bitcoin reserve so that the people who donated to his campaign can cash in on that investment by selling Bitcoin into all this hype. Now, whether or not he actually follows through, with a Bitcoin reserve, which really to me is an act of treason. I think it's a terrible thing to do to the country, to reward a handful of crypto buyers at the expense of the entire country by wasting money by going into debt to buy nothing. So I really hope that Trump doesn't do this. I think that the Loomis bill is going nowhere. I don't think there's any support for that bill outside of maybe a handful of people in the House or the Senate. So I think the only way there's a Bitcoin reserve is if Trump does it on his own by some kind of executive order, if that's even constitutional. But I hope that that doesn't happen. I mean, like, I've got no problem if people want to buy Bitcoin. I mean, I think it's a foolish thing to do. I think it's a digital pyramid scheme, a blockchain letter. I think a lot of people are going to lose a lot of money, and I think it's bad for society that we're squandering this money. But, it's a free country, supposedly. You're free to squander your money. And just because that's bad for the country, you could squander it. You earn it, do whatever you want with it, right? But where I draw the line is on the government squandering the public's money. If people want to buy Bitcoin, they're free to do it. The U.S. government should not be doing it because I pay taxes. Even though I'm in Puerto Rico, I still pay a lot of taxes every year to the U.S. government. I don't want my tax money used to buy Bitcoin. I don't want the government selling our gold. I'm an American citizen. So the U.S. gold reserves are there to protect me. I don't want my gold reserves sold to buy Bitcoin. And I'm sure there's a lot of other Americans that would share in that outlook. So that should not happen. The government should not use the power of the state, the coercive power of the state, to force citizens to buy Bitcoin if they don't want to buy it. And that's really what's happening because, they're running out of buyers to keep the scheme going. And so because they can't convince people to voluntarily buy it, they need to force people to buy it using the power of government, which is so ironic because Bitcoin is supposed to be anti-government. It's supposed to be a free market alternative to government. But now we're trying to get government to come in there to keep the thing going. We got Wall Street in first, and we kind of played that for all they could. They saturated these ETFs, and now they needed another layer of buying. And so they've got their hopes on the U.S. government. And any other that's dumb enough to follow our lead.
No, I can tell I've triggered you there with that question, Peter. So I'm not going to follow up with a question is like if the U.S. government starts to put gold and Bitcoin on the same level and pedestal and make it both a reserve or an official reserve. I wouldn't even call it a currency. It's just an official reserve, I guess.
Yeah, but a reserve of what? What can you do with Bitcoin? Absolutely nothing. And, the proposal for the Bitcoin reserve is that they buy the Bitcoin and that they're not allowed to sell any of it for 20 years. So, like, what good is a reserve that you can't tap into if you needed it? Not that you ever need Bitcoin, but it's, the reason that we have gold reserves is, let's say the US dollar came under attack and we needed to prop up the value. How would we do that? Well, we could sell gold for dollars so we could reduce the supply of gold, right? We would use our gold reserve to help support the dollar. Well, how do you use your Bitcoin reserve to support the dollar if you can't even sell the Bitcoin?
Yeah.
And if you tried to sell the Bitcoin, the market would crash. And so you wouldn't be able to support the dollar because the Bitcoin you were trying to use to support the dollar would crash even faster than the dollar.
One might maybe one small counter argument, or wouldn't even counter argument, but food for thought is like the U.S. Yes, it owns over 8,000 tons, I believe, in gold. But if you were to value it at today's prices, that would be like 3-4 months of U.S. deficit spending right now. Like, would that even make an impact right now, based on what we're spending?
No, we don't. Not really. We don't own enough gold. That's the problem. Or our deficits are too big, right? There are two problems there. But the solution isn't to buy Bitcoin. That just makes it all worse.
Yeah. Now, Peter, a bit of a summary question, maybe to sum up our conversation. If you were to invest $1 million for next year, or over the next 12 months, and this is not financial advice, this is just maybe to get a summary of what we've discussed, like, how would you allocate that money?
Well, again, right now the markets just keep going up, and a 1-year time horizon is relatively short. But again, I would invest the money the same way I've been investing it. I don't believe this rally is real. I don't believe the rally in the dollar is real. I think U.S. stocks are expensive, so I would continue to invest in value stocks that I find around the world to get out of the dollar and to stay away from inflated asset prices. I would continue to buy the mining stocks because I think they're really cheap. I would be investing in emerging markets because I think they're also cheap. And I think everybody expects the tariffs to damage the emerging markets. Potentially, they could be the salvation of those markets because I think those markets right now have been exporting much too much to the United States, exporting less to America and trading more with other countries or trading among themselves or producing goods that their own people can consume. I think is would be much better for their own financial interest than continuing to subsidize the profligacy of Americans.
So you sound like Jim Rogers. So you're obviously aligned. You're very, very similar.
Already, yeah.
Very similar. Peter, rapid fire questions. Just to sum it all up, Fed funds rate by the end of 2025, where is it going to be?
I think it will be lower than it is now. I mean, I don't know exactly how much lower, but I think it will be lower than it is now. And I think inflation will be higher than it is now. And that means real rates will be much lower than they are now.
Gold price at the end of 2025?
Oh, I don't know. I think it'll be above 3,000. I don't know how much further above it, but I think we'll get above 3,000 next year.
We haven't had much chance to talk about silver, but where do you see the silver price at the end of the year?
I don't know. I mean, it's going to break out eventually. I think 30 is the support. So, it could be $40 to $50, or it could be well above 50 if you can get above 50.
Bitcoin?
I have no idea. I mean, it would depend. I'd say it depends on the strategic reserve. So if the U.S. government actually launches a strategic reserve, the price of Bitcoin could be a lot higher. I mean, if the government's going to buy, 1 million Bitcoin, and if it's going to buy 250,000 a year, regardless of price, meaning that the government is price agnostic, they're just going to keep on buying regardless of the price they pay, then, a lot of people could just hold on to Bitcoin knowing that big buyer is there, right? That's like why you're buying it, is because there's a government that's legislatively required to buy it, right? I mean, it's like people would think it's almost like a sure thing at that point, right? Hey, the government's got to buy it no matter what. That's our exit strategy. So all we got to do is buy now. And the U.S. government will buy it. So I think if they actually come up with a strategic Bitcoin reserve, the price could go considerably higher. I mean, I don't think it's going to 1 million, but it could go higher. It could go to 200,000. I don't know, especially if the government actually starts buying. And of course, MicroStrategy continues to be able to borrow money and buy Bitcoin, and maybe some more countries decide to be emboldened by the U.S. government's commitment to pay whatever the price of Bitcoin happens to be and just be the buyer, required, even if they don't want to buy it, they have to. It's a statute. It could. But I think if I'm right and the government closes the door to that idea, right? If the government makes it clear that there will be no Bitcoin reserve, it's not going to happen. The price, I think, will be much lower than it is today. I think it will be below 50,000. I don't know where. But I think if the government shuts the door to that possibility, that's big. I think if there's a chance still that Joe Biden, he still has a few more weeks to dump the U.S. government's Bitcoin on the market before he leaves office. I think if Biden does that, which I would support, and I think it'd be good for the country, I think the Bitcoin price will be much lower than it is right now. Because I think if those Bitcoin are sold, there's nothing, even to base a Bitcoin reserve on, because that was supposed to be the starting point. And if there's nothing there, they may, I don't think they would go into the market to try to buy it back. And meanwhile, like, look at El Salvador. I was reading these statistics, everyone says, oh, Bitcoin's the future of money. So El Salvador in 2021, El Salvador passed a law, and it said merchants are required by law to accept Bitcoin in payment. And in 2022, only about 22% of the population used Bitcoin to make a payment for anything. So under a quarter. So far this year, a recent study showed that in 2024, it's only about 7% of people in El Salvador who have actually used Bitcoin for any payment, not for all their payments, but for just any payment. And so Bitcoin is a lot less popular in El Salvador now than it was when it started. And so if it's not working there, why would it work anywhere? And based on a new loan that they're going to get from the IMF, I think El Salvador is about to change the law. And next year, the requirement that merchants accept Bitcoin will be eliminated. And so even in the rare case where somebody wanted to pay with Bitcoin, the merchant would be free to say, no, I don't want it, which is where it's going. So all the people that think Bitcoin is going to be the money of the world, look, it's not even the money of El Salvador, even though it's legal tender and merchants are required to accept it.
No, it's an interesting world we live in. I'm not sure if George Gammon went to El Salvador or just Argentina, but I thought that was interesting, the trip he's done. Peter, it also sounded like what you just described was the content of episode 1000 of the Peter Schiff Show. Have you?
Peter Schiff. Yeah, my 1000th episode is coming up this week. So don't miss it. I've been doing, it's going to be my 1000th podcast. I may do it Wednesday night, because tomorrow is when we get the official, we get the Fed announcement, we get the press conference. So I may follow up, doing it after then.
No, we'll fantastic. We'll definitely link to your channel down below because we will only air this on Sunday, so it'll come out after episode 1000, unfortunately.
Oh, yeah, so it'll already be history. Yeah,
okay. Exactly. So we can still tease, but people might have seen, or some of our viewers might have watched it already. So, no, Peter, it was a tremendous conversation. I really appreciate your time as always. It's a great pleasure to catch up with you. Merry Christmas, happy holidays. Have a wonderful Christmas season here with your family. How festive is it in Puerto Rico?
Well, I mean, it's very festive. They love Christmas here in Puerto Rico. We won't be here, though, for Christmas. We'll be back home in Connecticut. It'll be much colder, so it'll be more traditional with maybe a white Christmas. We'll see. We'll probably do a little skiing before we come back to Puerto Rico. But we'll be back, in mid-January when the kids have to go back to school.
Oh, fantastic. Sounds like a dreamy Christmas. Peter, thank you so much for your time. Really appreciate it. And everybody else, thank you so much for tuning in. Merry Christmas. Thank you so much for watching. We really appreciate you supporting the channel, hitting that like and subscribe button. It helps us out tremendously. And it's also free. Might as well do it. We thank you for that. So we're trying to catch up to Peter here. He's got over 550,000 subscribers on his channel. We're way below and way behind that. So we're trying to catch up. We really appreciate it.
I've been growing slowly. I mean, I had over 500,000 when the year started. I mean, it's a really slow, movement here. I don't know.
It's a grind. It's a full-time job. It's a full-time job here. Absolutely. No, everybody else, thank you so much. Merry Christmas. We'll be back with lots more from our Outlook 2025 series. Thank you.